I'm Alvarez at MortgageWorks, where we have the answers and they're on the house. Not long ago, I was asked that with mortgage rates in the 6s, even the 7s, is it possible for a home buyer to get a fixed rate mortgage that might be in the 4s or even the 3s? Well, the answer is yes, and I'm not referring to some new innovative program that just hit the market. I'm referring to a program that's been around for decades. In fact, I originated many of these back in the 1980s when interest rates were even higher than they are now. What's the program? Temporary interest rate buydowns. They come in 3 different options currently. There's a 3-year buydown known as a 3-2-1, a 2-year buydown known as a 2-1, or a 1-year buydown known as a 1-0. And how they work is actually quite simple. Let me give you an example using the 3-2-1 option. Let's assume we have a note rate currently available for a 30-year fixed at 6% for no points, which, by the way, is true. Rates have improved a little bit. Now, using that 6% note rate, a 3% buy down the first year means the rate to the borrower the first year is going to be 3%. The second year rate is going to be 4%. The third year rate, 5%. And year 4 is when the loan will get to the note rate of 6% and remain there until the loan's paid off. Now, how is this buy down cost calculated? Well, that's quite simple. You take the principal and interest payment for the 6% note rate versus the principal and interest payment for the first year rate of 3%, net them out to get the difference, times 12, that's the cost of the first year of the buy down. You do the same calculation for year 2, same calculation for year 3. You add those 3 together to get the total cost. Now, that's not an insignificant amount of money. So what home buyers typically do is when they submit their offer, they would request for the seller to pay the cost of the buy down. Now, in the current environment, we think this is an excellent alternative strategy for what many buyers are doing right now. With the market shifting, more buyers think they have leverage to offer something below list price. We argue that a better strategy may be to offer something closer to list price, if not at full price, but in return get a concession from the seller by asking them to pay for the temporary buydown, in particular the 3-2-1. It's our belief this provides much more financial benefit to the borrower, to the buyer, because they're going to have a much lower monthly payment in year 1 and year 2, even year 3. Overall monthly payments that are going to be lower than if they just negotiated a lower purchase price. Now, one thing we do caution is that temporary buydowns are generally not a useful tool to use if you're having trouble qualifying based on debt ratio, because you're not typically qualified on that first year rate. Now, the other benefit we think of having a temporary buydown negotiated when you're purchasing a home is that it sets you up with below market interest rates and payments for the first 2 to 3 years, giving you time to look for an opportunity that if overall interest rates improve below your 6% note rate, you'll have an opportunity to refinance your loan into a new rate that's going to be lower than that 6% note rate that you may keep for an extended period of time. Now, for real estate agents, we think a temporary buydown is an excellent tool to use when strategizing with your seller as to effective ways to get the home sold. We think that when you're discussing with the seller setting the list price, that you consider the cost of a buy down and then either incorporate that in your list price, or at least being willing to acknowledge or accept some amount of reduction in your net price to the seller to cover the cost of the buy down. This will allow you to distinguish your listing by offering below market rates right in the listing that might open up your listing to a wider audience of potential home buyers. So it's our belief that this temporary buydown product, which again has been around forever, is actually beneficial for both the buyers as well as for real estate agents, for sellers, as an effective way to help get your home sold more quickly. So it's really a win-win for all parties involved. Now, we are now posting interest rates for temporary buydowns on our website. So I encourage you to go to our website at mwloan.com. We have a rate grid right on the homepage. Right at the top of that grid, we're offering what the current rates are for a 3-2-1 and 2-1 buydown. So check it out. And if you have any more questions about temporary buydowns, feel free to give me a call. I'm Alvarez at MortgageWorks, where we have the answers and they're on the house.